Expiration day is here. Today, early Uber investors are allowed to unload shares after the company's IPO 6 months ago. But in that 6-month period, shares have tanked almost 38% right out of the gate, really. Joining us to discuss what's ahead for the company is early Uber investor Bradley Tusk, founder and CEO of Tusk Ventures. There's, I thought, some good stuff in the report. Was there not, or do we need it? Does it take a lot of faith to believe what Uber said?
I think there's two fundamental problems. One is Uber hasn't done a great job in the last year or so of demonstrating a vision for why people should bet on them for the long term. But second, and this is Uber, WeWork, Slack, Lyft, Peloton, everybody, which is, well, there's just this fundamental misalignment between the private markets and the public markets. And the public markets are going to say, until we get to a price point that we both think makes sense, we're going to keep selling and we're going to keep going lower. And can Uber be a really great company? Yes. Is it necessarily a $40 billion company? Maybe not. Maybe the price point is $20 billion. I mean, I hope not, because I've still got a bunch of shares. But there's got to be a realignment between what the private market investors think things are worth and what the public.
I mean, in a zero interest rate world where we've had, should we be surprised that in an arena where there's no mark to market, that it gets totally out of hand? Is that what happened?
Well, I think it's even more than that. It's that if you are a mega fund, you basically calculate my 2% management fee is the amount of money I need to make every year to pay all my bills. I'm going to raise a fund that's 50 times that. That means people have these giant funds. They're just too big. And to deploy the capital, they have to deploy them at really high valuations. And so the wrong incentives are driving the prices and driving the valuations. And when it gets to the public market, public investors saying, this is not my problem. Like, I don't care. Why is this exercise bike startup worth $6 or $8 billion? It's not.
So the difference between Lyft and Uber, obviously, Lyft is the pure play, but still losing money with the ride sharing. Uber supposedly is actually making money on an EBITDA basis on its ride sharing, but losing money on the other 25, whatever it is, the Uber Eats and
But fundamentally, unless Uber just decides to live in a world with a much lower market cap and valuation, if they want to be a company worth tens of billions of dollars, you can't just be ride sharing. You've got to be freight and eats and autonomous and drone delivery and all that other stuff too.
Margins are going to get squeezed in the ride sharing, aren't they? Because they can't continue to subsidize all these rides.
Yeah, well, I mean, the one good effect of both companies going public is some of that subsidization has stopped happening, because when they were private companies, they didn't have to report on earnings. They could just do it in an unlimited fashion, and that kept driving the margin down even further. But on top of that, California, as you know, passed legislation a few months ago that turns all Uber and Lyft drivers into full-time employees. There's now referendums and litigation, all kinds of stuff around that, so it hasn't fully taken effect yet. But that's going to meaningfully impact the margin as well if other states follow suit, and you see states like New York and New Jersey already doing so.
Bradley, I saw something that was written today saying that these companies are battling for the prime markets, which is the urban markets where you can make a lot more money, that nobody really wants to push into the suburbs because it's just not as profitable. Is that the case?
Yeah, I mean, I think fundamentally, if you ask any, we all get Ubers or Lyfts, and when you ask the driver, they will tell you it's a hard job, right? And you need a lot of volume to make it work. And if you're sitting on the sidelines a lot, whether it's in a suburban town or in the parking lot of an airport, the math doesn't really work.
Today is the expiration of lockups, and from just according to the prospectus, there's about 545 million shares that had been purchased before the IPO that are now underwater. You were a really early investor, so I'm guessing you're not underwater.
Not at all, but
are you going to sell today?
I'm going to sell some today, although a little less than I anticipated, based on what happens. The price came down. But what's really surprising to me is I sold about 2/3 of my shares to SoftBank when they did the tender offer about 20 months ago. I thought I was selling at a discount. Turns out I was selling at a premium.
So, are you worried at all about the fact that Uber was a great business model when unemployment was an issue, and now that the labor market is getting really tight, these people can actually get full-time jobs? So the Uber value proposition for a driver becomes less and less attractive.
Yeah, I mean, I think that is true, except for the fact that the way people work has changed more fundamentally than just purely the supply and demand of the market itself, right? I think there are people who want to work in a different fashion. Right. So there's still a fairly decent supply of Uber drivers, but there has to be enough demand to make it worth their while. And the combination of legislation making the drivers full-time employees and less subsidization and everything else drives up the cost, that drives down usage, drives down demand. So it's, there's a virtuous cycle that everyone likes to use in tech to talk about how things work together for good, but it also works in reverse.
Right, absolutely.
So as an early investor, you're not concerned? You feeling good, right, for Uber? Anyone else?
Anyone who was $50 million, sure, I'm very happy.
Anyone else going to sell with the lockup?
Yeah, I think a lot of the employees, keep in mind, if you started working at Uber in 2009, 2010, you've been rich on paper for a decade and really not had that much actual cash that entire time. But you probably took advantage of the SoftBank tender offer about 2 years ago, but more or less, you've been waiting for this day for a decade. And a lot of people are saying, I've got to make the mortgage payment. Or
I just wonder whether they're unloading it to bag holders or whether they're the ones that are wrong in cashing out when they should be buying.
Yeah, I mean, I don't know about buying, but I think if you're in a position where you don't have to sell, you're going to hold a lot more. I don't have to sell.
So you're not bullish at all on this for a couple of years.
I think that until they hit profitability, the market's not going to give them. What they I think expected was because the earnings were a little better than expected, they would be rewarded in the market. The fact that they weren't, to me, is a clear indication that until the fundamentals turn around and change, pure optics is not going to do it alone.